Right. Okay, guys. Good evening and welcome back. Start the class. You know, we are discussing about this. Right. We are discussing about the uh, bank reconciliation statement. Right. Now, in bank reconciliation statement, we yesterday we discussed many things. We discussed about like in the case of overdraft, how we prepare the bank reconciliation. Understand? Right. And also we discuss about dishonored checks, right? So how we prepare, how we record dishonored checks, right? So this is thing I told you. Then page number, turn to page number 139, 139, 139, right? So 139, heading other reasons for differences in the balances. What are the other reasons for the differences, right? The difference between the uh, balance in the business cash book and the balance on the bank statement may also be caused by these are the reasons, right? Direct debits. A direct debit is when the business give permission to an organization to collect amounts owing directly to its bank account. This method is often used for pay mortgage, insurance payment, etc. So which means like direct debits, which means like we are now sometimes we may have taken some like loans and the insurance and the mortgage, understand, right? So now sometimes the business give the permission to an organization to collect amounts owing directly to from its bank account. Now sometimes we need to pay. Now think about loan. Once we obtain a loan, we need to pay regular intervals, understand, right? So some now when you're obtaining a loan, you need to find a bond, right? So in that bond you can agree, right? Okay, from this from my account every time deduct this amount, right? Standing order. Standing order means what? Standing order means like when standing order is when the business instruct the bank to pay a specific amount on a given date. So sometimes we are giving a written request to the bank to pay this amount, right? Bank charges, cost charged by the bank. Sometimes bank is charging like some sort of amounts. Only we can get to know through the bank statement. These costs could include overdraft fees, cost to maintain the account. Interest. This could be interest received on credit balance or interest paid to debit balance. Sometimes we receive interest, but in current accounts we are not receiving the interest, only the like savings account and the fixed deposit. Sometimes like we need to pay interest to the bank, for an example bank loan or any other things, right? All uh, four of these payments are made by the bank on behalf of the business. Entries in the cash book cannot be made until the business receive the bank statement. Till the business receive the bank statement, we can't get to know. In the UK, more recent methods of making payments by the bankers automated clearing service, BACS. This is a computerized payment transfer system used to pay the trade payables, wages and salaries. Details of these payments will appear on the bank statement and will need to be entered in the business cash book. So these are the other reasons, right? We identify the reasons in here. We identify overdraft as per cash book. So what are the reasons? We unpresented bank lodgements not on the bank statement, right? So then apart from that, we identify bank charges, checkbook charges, those things, right? Okay, the lesson has finished. We need to go for the final checklist for preparing the bank reconciliation statement. Okay, final checklist: balance the cash book, right? So balance the cash book, right? In the final checklist, we need to know first one, balance the cash book. Then next one, you can see after that, uh, compare the bank column of the cash book with the bank statement. Tick off the entries that are the same. Update cash book with any item not ticked on the bank statement. For example, standing order, direct debits, bank charges, interest on dishonored check. So we need to tick them. If there are any error on the bank statement, ask bank to correct them. Prepare the bank reconciliation statement. That is the final checklist. Hint: always check that the opening balance in the cash book and the bank statement are the same. You need to check whether the opening balances are correct. Okay, so we discuss about now the other reasons for the differences in the balance. Okay, let's write a small note. Write the thing. Other reasons for the differences in the balance. Other reasons for the differences in the balances. Right. First one, direct debits. Right. Standing orders. Then bank charges. Interest. Interest sometimes receive it is receive appearing in the bank statement credit side. The interest is charged appear in the bank statement credit debit side. Okay, write it. These are the other reasons. Write and raise your hands. Okay, yeah, sure. Yeah, Sharon.
Yes, sir.
That's right. Okay. Now let's do the end of the chapter questions. Okay. Write the heading. End of the chapter question. Write the heading. End of the chapter. Number one. Okay, do it with me. Yeah. Pay attention. Okay, read the question. Nah? Number one. Safira, Safira's cash book saw a balance in the bank column 200 620 debit. Now in the cash book bank column, debit balance is a favorable balance since it's prepared under asset principle. Understand? On 30th April 2015. She compared his cash book with the bank statement at 30th April. She finds the following items were included on the bank statement but not yet in the cash book. These reasons included in the bank statement, which means the bank book, right? But not included in the cash book, which means in the business, which means these things are circled in the bank statement. Got it? Right? Bank charges, direct debits paid for insurance, bank interest received, bank transfer from customer, dishonored checks, right? These are the reasons. Write up the cash book as at 30th April 2016. Bring down the updated balances. Okay, right. And there is another things. Okay, first let's prepare the thing, which means they are asking about to us to prepare the amended cash book, which means like now initial cash book there was a debit balance. Again, if they are asking us to prepare the cash book, which means the amended cash book, right? The amended cash book. Initially, there was a balance of how much? 620 debit. 620. Do with me, balance board forward. Right. Bank charges. Because of bank charges, our cash book balance should be decreased. Bank charges. How much? 15. Direct debits for insurance. If we paid the direct debits, our like cash book balance should be decreased, right? Direct debit means in bank state. These are the reasons found in the bank statement, right? In bank statement, debit means the deduction side, right? So I told you bank statement debit things we write in credit side in here because the rule is changed because this is business books. Now in here, direct debits within brackets write insurance 40. Next one. Bank interest received 20. Bank interest received 20. Next one. Bank credit transfer from customer, which means like credited to the bank statement, which means bank balance increase. If the bank balance increase means we debit to you. Bank transfer 130. Credit in bank statement, credit means bank account debit. Bank statement, right. Dishonored checks. Uh-huh. Now there is a matter. We don't know whether this is which kind of dishonored. Issued check dishonored or deposited check dishonored. Now mostly this in here, like when we issue checks, right? So if the now I told you, hope you can remember, in here go to the dishonoring part, go to the dishonoring part in here. Now I told you, right, 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 okay. Now in here you can remember in this one, K OTA gives the checks. Now OTA did, now like what will happen, OTA gives the check to someone. See the third bullet point, OTA did not have a sufficient fine in the bank account, and the bank will allow not allow him to have an overdraft. In such case, the check will be dishonored. The bank will write on the check, refer to drawer. He will have to contact OTA about the selling his account. Now, when we issue a check to someone, if it is dishonored, understand? So now think, I issued a check to someone. I credit the bank account of my business, right? So when I issue my asset decrease, I'll credit it. If it is like presented to the bank, my bank statement will debit. If the bank is refused it, it is not appearing in the like debit side, because the someone who took my check, when he presented it to the bank will give a notice called refer to the drawer. Understand? Because of some reason. But in here, there is a thing called, like you can see, dishonoring of checks, right? So we don't know whether this is dishonoring of issued check or which kind of things. Understand? Now when I deposit the check, I debit my bank statement or bank account. So when I give it to the bank, if bank is refuse it, understand? So it is not appearing under like credit side of the bank statement. Now in here it is just say like dishonored check, no information whether this is issued check or dishonored or the deposited check dishonored, right? Understand? Can you hear me? Right? So let's assume that like this is bank charge, direct deposits, bank interest, dishonored checks. Yanni, let's go down and nothing in here. Even like this is issued check dishonored or deposited check dishonored. Just only the checks dishonored. If we go up and consume again, like check again, let's assume that like deposited check dishonored. Yes. So if the check deposited, we debit it. If it is dishonored, we credit it. Dishonored check. හරියට කියලා නෑ, no information. Dishonored check. යන්නේ. How much? 65. Right. Now let's balance it. Help me to balance it. In here, 0, 7, 7, right? 770. Deduct it. How much? 650 BCD, balance brought down 650. Now next one. At a 30th April, Safira discovered the following. Safira discovered the followings in her uh, already prepared cash book. She has recorded a receipt in her cash book 300, but it has not deposited in the money at the bank. She has written a check 250 and entered in the cash book, but uh, it has not yet paid to the bank. Now, B, they are asking about prepare bank reconciliation statement. They are asking us to prepare bank reconciliation statement. Statement as at 30th April 2015. Understand? Right? 30th April 2015. Right. Now, you can see uh, balance as per amended cash book. You can write here. You can write balance as per amended cash book. Balance as per amended cash book, because since they haven't given you the it is a debit balance 650. If it is overdraft, you need to deduct plus minus, then uh, balance as per bank state. Right. Now you can see in these two reasons. Let's see first one. First one. Now tell me whether it's unpresented though, uh, like bank lodgement not entered on the bank statement. Right. Okay. First one. She has recorded a receipt in her cash book 310. She recorded debit side of the like something in the cash book 310, but it's not appear in the bank statement credit side. Bank statement credit side not appearing means this is lower, right? Lower means this is 90. This is debited, which means added. Added means 100. From 100 to take 90, we need to deduct how much? 10. Understand? So this is what bank lodgement I told you in here as previous. You can remember this is the thing. Bank lodgement not on bank state. Bank lodgements not on bank state, which means another word deposited but not yet realized. Right? How much is the balance? How much? Sorry, 310. Next one. She has written check 250 and entered in the cash book, but it has not yet been paid by the bank. Now she issued a check, but is when she issued a check, she credit the cash book. Since the that person haven't visited the bank, which means it's not appearing in the debit side of the bank state. When she issued check, she credit the cash book, which means balance decrease is 90. Since it's not deducted in the bank statement, this is 100. So 90 plus 10 to take the 100. This is what? Unpresented checks. අපි දැන් Now it's like this. Now when we prepare the bank statement increase debit, sorry, bank account. This is the business books, this is the bank book. This is the business, this is the bank. Okay. This is the increase side, decrease side, because the asset principle. This is the increase side, decrease side. This is the liability principle. Right? When we issue a check, we credit the business bank account. Means we know we in sooner later, once this person visited the bank, our bank balance will decrease. But since this person haven't visited the bank, it is not appearing in the debit side. If he appeared, this will debit it in the bank statement, because once he withdraw the money from the bank record in the debit side, bank statement. Now when we issue a check, when we credit it, our balance is decrease in our books. I told you that's why if we deduct something, we take it as 90. We take the base as 90. But since it's not debited in the bank statement, because the balance is same, 100. Take 100. If the since the bank business deducted 10, business balance will decrease up to 90. In here 90. This is not deducted. Not deducted means still the same, which means 100. 90 plus 10 is the 100. That's why we added the 1%. Right? Okay. How much? 1% checks 200, 250, right? At 250 minus 310. 590 is the answer. Okay, write it and raise your hand. There is another one. Sharifa's bank statement shows a balance that is different from the bank reconciliation statement. Sharifa's bank statement shows a balance that is different from the bank reconciliation statement. Suggests two possible errors that may have caused this difference. What are the like reasons? What are the things we can identify like errors causes for this difference? Some like you can write. So what are the reasons? Business errors or mainly bank errors. These are the two main error categories. Let's see what is the term called business errors. For an example, we can write when issuing a check, issued a 100 worth of check, but mistakenly recorded as 10 in the cash book credit side. Credit side. Understand? This is one possible error. Another one. Deposited mm, sorry, bank statement shows a balance that is different from the bank reconciliation. Sorry. Bank statement balance difference with the bank reconciliation, which means bank errors. What are the bank errors? First, you can write, when it comes to bank statement, like after every transaction, we balance it, right? So, balances in the bank statement mistakenly recorded. Example, now think balance 100 credit minus issue check 10 should means debit. So balance should be 90 credit, but mistakenly recorded as 80 credit. Understand? One error. Another one, right? Another one. Like another one. Issued a check 100, but mistakenly mistakenly credited it to the bank state. Now when we issue by the bank, when we issue, we credit. Bank statement should be debit, but mistakenly bank credited. Understand? Right? Like so. Another thing we can write. Okay, write from the here and raise your hands. I'll give you further. Write it and raise your hand. Right up to here. Right from here. Another thing you can write omission errors of the business. Omission errors of the business. Sometimes business may recorded mistakenly. Business may forget to record something. Now, once you done, raise your hands. Yeah, share done. Done, right? Oh, still writing. Right. Let's see. First one done. Let's see the do the second one as well. Right. Number two. Number two. Let's see. Right. On 31st January 2017, Chelsea, a trader, obtained a statement from her bank and compared it with the bank account in her cash book. The bank balance shown in the cash book was overdraft 1780. Bank balance shown in the cash book means cash column, bank column, cash book, bank column. It's an overdraft. This difference from the balance shown in the bank statement because a check for 27 payable to Katie has not been presented for the payment. Uh, Cash paid on the bank monitoring 100 had not been credited to the Chelly's account. Uh-huh. So cash paid into the bank amounting and it had not been credited to the Chelly's account. Prepare bank reconciliation statement and show the balance that appeared on the bank statement on 31st January 2007. Right. Let's see. They're asking about bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement as at 31st January, as at 31st January 2006. Bank overdraft as per cash book. I told you if it is bank overdraft, we write it as minus 1708 plus minus. We don't know the other one. Let's see, right? First one, right? The check 270 payable to Katie had not been presented for payment. Now, payable to Katie had not been presented now, which means we issued a check. Understand? When we issue check, we credit the bank account. Understand? Right? Which means decrease. So decrease means this balance is 90. Now we are need to find the bank statement balance. Since it not presented to the bank balance still not deducted, which means 100. 90 plus say 10 is the 100, so which means the unpresented check. Unpresented checks, how much? Unpresented checks 200. Next one, right? Cash paid into the bank amounting to 800. So cash paid into the bank amounting to 800 uh, had not been credited to the Chelly's account. Now, like what has happened? We paid, right? We paid now. Sorry, who's the Chelsea? Chelsea is the owner. Chelsea, what owner has done cash paid into the bank, which means cash paid into the bank means which means deposit the cash into the bank. Understand, right? So 800 has not been credited to the Chelly's account. Now, when owner invests money, understand? So owner's account should be credited because owner's ownership increase, capital increases. Understand, right? So bank should be debited. Now bank, which means in business bank account, cash book bank account should be debited. Understand, right? It already done. Bank account already debited. Understand? Bank account already debited, which means cash book bank column already debited. But not only credited to the Chelly's account. Understand? Chelly's account not crediting, which means if I take number two, when owner invests money, right, cash paid into the bank, right? Right? So when we pay cash, right, cash book should be credited. So the cash book should be debited. So how much? 800. It's done. But the capital, which means the Chelly's account, Chelly is the sorry, Chelsea account should be credited. It's not done. This is okay. This is the our needed. It's already done. So which means it's not affecting to here. Right. So then let's see. This is adding. Once we can you deduct from this, deduct and tell me 1780 minus 1780 minus 270. How much? 1510. Okay. 1510, right? So it's still the overdraft. So since the other one is okay, 1510 is the bank overdraft as per bank state. Okay. When owner is it clear? To send me a thumbs up, Liash. When owner invests money, owner's account credited, bank account should be debited. Bank account, there is no any error. Owner's account credit is the matter in. Okay, write it and raise your hands. Right, this is the answer for number 2. Liyashe, have you finished? Right. Okay. Number three. Give a try. Let's see. Right. Okay. Okay. Number three. Let's see. Philo is a trader. His financial year ends on 30th April. The bank column of a cash book for the month of April 2017 were as follows. You can see bank column, right? This is the bank column, right? Now let's see, right? First of all, I told you check the opening balances are correct. Now you can see in here how much is the bank cash book opening balance? How much? Cash book opening balance how much? 10. Bank statement opening balance 2120. It's not balancing, right? On highlight, circle it. Opening balances are not telling. Opening balances are not telling, right? Circle it both, right? Let's compare the bank account debit side with the bank statement credit side, right? 314, 314 both appear. 500 in here but not in here, so circle it. 500 in here but not in here, so circle it. Here but 62 in here but not in the other one, so circle it. So circle it, right? 500 in here but not in here, so circle it. 62 in here but not in here, so circle it. Understand? Let's see. 436 is in the both, so put correction mark. 400. 125 in here, general expenses in here. 390, right? In here but not in here, so circle it. 360, circle it. Right? 340, circle it. You can see, like, just remember 340, it's related with this one. See, you can see it. I'll show you. 340, you can see it's related with the other one, so circle it. 11, circle it, right? The following errors were discovered. Let's see the errors. The cash book balance brought forward on 1st of April should have been, the cash book balance brought forward on 1st of April should have been 2120. Cash book balance should be 2120. This is incorrect. 2120. This same with the other one should. There is error. The bank has credited a dividend 62 to K Value's business instead of her personal account, right? Personal account. You can see this 62 is like bank has credited a dividend of 62 to KY Leo's business account instead of a person. Now, this is something, this 62 something relevant to his personal thing. It is not relevant to the business, which means like dividend should be received to his personal account, but mistakenly bank recorded in the bank statement, understand? Right? So, which is in the bank business account. Update the cash book and prepare the bank reconciliation statement, right? Now, let's prepare amended cash book. First one, this is number 3. First, let's prepare the amended cash book. Amended cash book. First one, right? You can see how much is the existing balance. You can see the existing balance is 2073. So take it, balance brought forward 2073. Understand? Got it? Right? Now, in here, we recorded the things, right? Sub circled in here. Understand? Right? Circle in the bank statement. Right? 360 in here, but not in here. Right? Then, like, okay, first let's take the insurance. Insurance should be in here. Insurance how much? 360 should be removed. Credited, debited means in here credited, right? So now you can see bank charges level. Now I'll take the easy things. Bank charges level. Bank charges also the balance should be charges also level. The other one. Now look here. This is really important. First I take this one, right? Opening balance should be 2120, but we recorded as 2210. Understand? The closing balance is also wrong. This balance is wrong. Understand? Right? Why? Since the opening balance is also wrong, the closing balance is also wrong. Now we adjust it. Now tell me the difference between 2220 and, sorry, 2120 and 2210. Deduct it. Now you know the recorded balance is 2210, 2120, which means opening balance, not this balance in here, this is the opening balance, is 90 higher. Understand? The amount should be recorded as 2120, but we recorded as 2210, which means 90 higher. Understand? Which means since the opening balance is higher, the closing balance also will be higher. මුල් balance එක වැඩි නිසා අන්තිම balance එකත් වැඩි වෙනවා. So since the opening balance matter, since the opening balance is higher, how much? 2220. So 2210 minus 2120. We need to remove it. 90. Next one. And apart from that, you can see there is another thing, right? You can see another thing, dishonoring. Now we should check this one. You can see we should this 314 check. So we deposit this one. We deposited this one, right? We debited. In here, now initially in the bank account we debited, and it's already credited to the bank. Understand? Right? But again, it's debit side appearing in the bank statement, which means bank was dishonored it. Understand? If so, initially we debited in here, so to remove it, dishonor. How much? 304. Right? 340. 62 is the matter in the bank statement because of the like bank error, right? Bank error. Now let's take it. Let's balance it. Now can help me to balance it. 2073, 2073. Did I get the total of these things? 360 plus 11 plus 90 plus 340. 1290. 1290 is the BCD and the BBD, which means the favorable balance. Bank reconciliation statement. As at 30th April, 30th April 2006. Balance as per cash book, amended cash book as per amended cash book 1298 plus minus balance as per bank state. Right? Let's see the first one. 500. This is what? Bank like not entered in the lodgement. You can see this is this one, means we call it as bank lodgements not on bank statement. Now it's what will we do in here? It's appear in the cash book debit. Amendment cash book is also the cash book, because initially first we prepare the cash book and come to the amended. So it's debited, added. So which means 100. In here 90. So 100 minus 10. Bank lodgement not on bank statement. How much? Right? You can see it's 500. Now the next one you can see is 310 issued but unpresented, credited in the cash book but not in the debitors of the bank statement. So we credit the cash book, which means deducted. Now it's 90. This is 100. 90 plus 10, which means unpresented. How much? 390. Next one is 62. Is 62 credited to the bank statement? This is owner's personal like credit transfer. You can see this 62 credited 62 instead of her personal account. Now this 62 should not be recorded in the business, sorry, bank statement. These are wrong. Now which means we added the, in here we credited the bank statement, which means 100. In here not credited, which means 90. 90 plus 10 is the 100, which means like personal dividend deposit error. How much? 62. Now tell me the total. 2, 5, 4. Get the total. Deduct 500. 1250. Yes, we got the same balance. You can see the closing balance also 1200. Understand, right? No, raise your hands. Share ID then, right? Okay, done, right? Done. Okay. Now see the summary. End of the chapter checklist. We use bank reconciliation statement to check the accuracy of the transactions recorded in the cash book. You need to update the cash book first, then prepare the bank reconciliation statement. Okay, let's do the exam practice. Do the exam practice. I'll give you a few minutes. I want you to do it individually. Let's cover a few things. Rest of the things will be covered tomorrow, and you can then we can do it. Just wait. Okay, do it. I'll give you a few minutes. Right? Exam practice. I'll give you like 8 minutes. Do it. Do it alone. Do the exam practice question number one, two. Let's see the answers. Number one. Try to do the other things, huh? No enough time. Right. Let's see the answers for the first one. The bank reconciliation. What is a bank reconciliation statement? Let's see. A statement presented by a business to the bank, listing checks to be credited by the bank, a statement sent by the business to a customer who has purchased goods on credit, a statement sent by customer each month by the bank, a statement showing the difference between the business cash book balance and the statement. That is the answer. So the first one, the answer is D. Right. Number two. Let's see the number two. Right. A bank statement shows a balance of 1,650 credit. Dishonored check 310 and standing order 50 paid by the bank have not been entered in the cash book. Right. So, right. In here, what is the debit balance of the cash book before it was updated? Before it was updated, right? Now you can see, right? So, like if I prepare this one, right? If I prepare the cash book and the bank statement, right? Right. No, I'll do like this. Now let's prepare a statement. Now, initially, bank statement balance was and the cash book balance plus minus 1,650 the credit balance, which means the favorable balance. They're asking the debit balance of this one, right? Now you can see dishonored check, sorry, 310. Now dishonored check means what? We debited in the cash book, understand, right? We debited in the cash book, right? So, but it's credited and debited, understand, credited and debited. Because of dishonor, we debited, which means our balance is 100. We debited means we in here not recorded 90. Why? It's credited and debited both. So 90 plus 10, dishonor. How much? How much? 300. Next one, standing order. Because of standing order, bank statement balance will decrease, right? So in here this is matter, right? In here this is 100, this is 100, this is bank statement 100, bank statement balance no change, right? Sorry, in here see, now dishonored check 310. Now when it comes to dishonored, in our cash book balance we here there is nothing, so bank statement no impact, so 90, right? So 90 plus 10 is the 100. Dishonored checks, how much? 300. Let's see the next one. Standing order. Standing order, because of that, bank statement balance deducted. This is same. So this should be added. Standing order, how much? 55. 2050. The answer is D. D is the answer. Write the D. Write it. Number 3. Let's see. A business prepared a bank reconciliation statement. Start with the balance as per the bank statement. What is deducted from this balance as per the reconciliation statement? Okay, initially we start with the bank statement balance. What is deducted? Amount not yet credited by the bank, which means entered on like bank lodgement, not on the bank statement. Now, when it comes to that one, it is like you can see. I'll take it like this. Initially, we are taking there are four errors 2, 3, and 4. A, B, C, and D. The bank rate. In here, we take bank statement balance. Understand? Plus, minus. Then the bank account. In here, like amounts not yet credited means we debit the bank account, which means 100. This is 90. So 90 minus 90 plus 10 is the 100. Understand? Right? This is adding. Bank charges not recorded in the cash book. Because of bank charges, our bank account balance is, so bank statement balance is decreases 90. Not recorded means this is 100. 90 plus 10 is the 100. See, standing order paid by the bank but not entered. Standing order paid means bank statement deducted. This is not deducted. So 90 plus 10. Finally, unpresented checks. We issued, right? So issued means you can see this is deducted 90 and not paid, which means this is the 100. 10, 100 minus 10. So which means this is the only one we deducted. The answer is, what is the answer? D. Right? Right? The things. Number 4. A business receive a bank statement and update the its cash book. Which item will increase the bank balance in its cash book? A business receive a bank statement and updated its cash book, which will increase the balance in the cash book. Bank charges decrease, credit transfers increase, interest charge, when the interest starts, balance should be decreased, standing order, balance should be decreased. So the answer is B. B. Number 5. The following information is available at the end of the month. 1 minute. Bank statement balance, cash book balance, unpresented checks. What is the value of the receipt of the cash book that have not yet appeared in the bank statement? Right, right. So in here, if I take this one, I'll prepare the bank reconciliation. Bank, right? So bank statement balance they have given credit balance, which is the favorable. How much? 4,000, right? Plus minus. Then cash book balance. Cash book balance given to you as 5,000. In here, if you take the unpresented checks, you can see unpresented will be issued. Issued means in here 90 because we deduct. Not present means 100 plus 900 minus 10. Unpresent. 800. Right. Next one. What is the value of the receipts in the cash book but not yet appeared in the bank statement? Which means receipt in the cash book, which means we added it here. In here, not added means 90. So it should be plus in here, right? Unrealized means a bank lodgement not entered in the bank statement. Unrealized state. This should be the value. This is minus, right? Right. We need to go from down. In this is 5,000 in here, 5,800. 5,800 minus 800 means in here. Then this value is how much? This value you can see 4,800. 1,800. That is the answer. 1,800. See, we go from the down. Number 6. What is the purpose of preparing a bank reconciliation statement? To check that all expenses have been paid, to check on the amount owed by the trade receivable, to explain the difference between the bank statement and the cash book balance. I will see how much the bank increased during the accounting period. In here the answer is C. In here the answer is C. Finish it and raise your hands. So 7, 8, 9 and 10 will be discussed on tomorrow. 7 to 14, and then we can go to the past papers. To bring the past papers tomorrow. Is it clear to you? Send me a thumbs up. Yeah, sure. Finish up here and raise your hand. Start waiting for the raise hand. Once you done, raise your hand. Waiting for the raise hands. Hope you're still right. Right? You are done. Who's still writing? If you are still writing, send me a thumbs up. All good? Right. Done, right? Okay. So only few things to do, right? You know, like we need to do only few things, right? So we finished every other thing. So only few things remaining to finish, right? So these things will be finished, like bank reconciliation things will be finished on like tomorrow, and we can go to the past papers. I told you what are the past paper related things, right? So may try to do these things, right? Try to do those, right? Okay, from 7 to 14, right? Let's meet on like tomorrow 9 a.m. Thank you for the participation. Good night. God bless.